now that Chris's house catches on fire and has to be rebuilt,
Mhm.
that's going to cost maybe 20, 30% more than what it did 3 years ago. But I've gotten
Yeah.
no rate on Chris's policy for 2.5 years. So what happens with inflation is it destroys the equity markets, right? Which
Mhm.
we've watched the stock market get pummeled. We've watched bond prices get wrecked. And so their asset side of their balance sheet has been impacted.
Right.
But the claims inflation has continued to go up. And
Yep.
so inflation
It's not a good
actually
formula.
hurts, yeah, it hurts the investment side, but it inflates the claim side. And again, as agents, we don't think about this crap because
Damn.
we're
Yeah, that's
agents,
crazy.
right? We don't take the risk, we're not paying the claims. And so I think a lot of times for us when we're at the point of sale, we're
Mhm.
just like, oh my gosh, why is this insurance company like making my life so hard? Like, I just want to write some business, get paid.
Yes.
And but it's all those mechanics behind the scenes that are the things that are creating for us the reduced capacity, aka a much harder market, right? Meaning the
Got it.
companies don't want to write as much business, and when they do, they're going to charge more rate when they can get it,
Mhm.
eventually. But anyway, so that was kind of a long-winded, winding
No, no,
trail
no.
on the recession question, but
Totally. No, I think everything you said there, it was definitely extremely value packed. So I no, I definitely appreciate that. It's probably like for some of the newer guys that are watching or gals watching this, you might have to rewatch and like re-listen to it because it is a lot to wrap your head around, especially early on. Like I said, I didn't understand it at all. And now even just there, several things have clicked for me, which is good stuff. Um, Tony, so I guess the next thing I would say too, so now that we're aware of what's happening and like where we're at, what can like agents or what in your opinion can agents do to navigate these choppy waters of insure insure dude, I'm seeing it firsthand. Like I'm going in, like you said, I just want to sell the damn policy. I just
I
want to
know.
get the deal done. And like that's really that's what obviously protect the customer, right? Get them the best possible deal, number one. And then sure, earn our commission. That's what we're here for. And I think everybody is on the same page, hopefully. But what can we do to like navigate these waters and try to set ourselves up for success? Because it's just not, yeah, it's not easy right
No,
now.
I know, dude, I know. So, I want to answer that question, but one thing I want to just mention as a pretext to my answer
Yeah.
is right now, what's super important, I believe, for all of us to understand on the agency side is
Hmm.
that the macro trends, like the mega trends that are going on that none of us control, they're impacting all of our carriers, and the carriers are reacting in ways that we in my career and definitely in your career have never experienced before. Me in California specifically, where um a lot of the actions that are happening and the restrictions on writing, not wanting to write as much business and everything, like it's very widespread, right? It's not like in a normal market,
Hmm.
you have carriers, like you said a second ago, like some carriers are doing this and some
Yeah.
carriers doing that. Right now everybody's doing, it's like peanut butter, like everybody's stuck. Just spread the peanut butter, we don't want to, everybody's mucked up. And just like in a normal market, like three carriers make these changes, and so then as an independent agent you go to your other two carriers that
Hmm.
are doing well, and then okay, they tighten up, but by the time that they tighten up, two other carriers are loose again. So
Right.
you kind of like have choice and you remarket and you do what you do, and that's how we retain our clients long term.
Interesting. Yeah.
So the reason I say this in the context of what do we do is that in the next, I believe, again, here in California, the next 2 to 3 years, we're probably going to see rates go up north of 20%.
It's crazy.
Um, that's how much need there is based on what I've seen or read. And it's not because of that whole peanut butter smattering that's gone over everybody in the market. Every single carrier, it does not matter if it's Geico, Allstate, Wawanesa, USAA, Travelers, Hartford, Kemper, Mercury, Safeco, like Liberty, it doesn't really matter.
Mhm.
Everybody's needs rate. And so if you're in a different state than California listening or watching this, your state probably
Mhm.
allows your insurance companies to file their rates. Allstate and Progressive, and if Travelers, a few of the other publicly traded companies. Um, if you don't listen to earnings calls, I do suggest you think about listening to some of the publicly traded earning calls. Their question and answers at the end of their earnings calls are always very enlightening.
Hmm.
But one of the things that I've heard now from multiple companies is, hey, we've taken 15% rate or 20%, in other states where they're getting their rate increases. So for us, once the rate increases start, everybody's going to take it. Now, what does that mean for preparing as an agent?
Right.
A couple of things. When you're in a harder market, you need to be way more proactive. Like it's
Sure.
kind of a fine line because nobody cares about their insurance till they have to care.
Right.
That's one of the dirty little secrets of our business is that none of us care about insurance like that. You and I don't want to like add a car to our auto policy. Like that's not the top of our list in any day.
And
Um,
just real quick, Tony, that is one of the best lines that I use a lot. I'm like, nobody thinks it happens to them until it actually does,
yes,
you know what I mean? And also nobody really cares about how much they're paying when they have an actual claim. Like
it's true.
the time that you don't want to find out about your coverage at the time of a claim. Like those are a couple little lines that I drop to customers. I'm like, you're not going to care about how much you're paying each month when you're on the side of the road and somebody's injured, and you're going to be calling me just happy that you got the right coverage. Let's get this going for you.
100%.
Like those are good. Just real quick, I want to throw that in there.
Totally could. I 100% agree with that. Like I think, and this is one of the challenges of independent insurance agents, right?
Yeah.
Is that when because our clients have been conditioned or prospects have been conditioned to all about price. It's just
Right.
price. It's speed and price. Like that's what unfortunately some of the big advertisers have made it about.
For sure.
But in the moment of truth, in the moment of crisis, in the moment of need, there is no other industry
Hmm.
that actually restores you to the way you were
Mm.
prior to the loss. There's no, and this is the thing like about insurance, and especially for like our younger, maybe there's some younger audience, and I'm 49, guys. I have a lot of white gray hair. If you can't see me, yes, I'm explaining my look and feel here. Chris is the Dapper Dan. But guys, like you think about benefiting society and people, businesses. There is honestly, yes, a lot of people think insurance companies, they hate it. It's out to get them. They're not going to pay whatever. But the reality is like if Adelphia writes a wonderful like auto home umbrella package for somebody,
Hmm.
and we have personally experienced this where there's been fatality claims with young drivers,
Mm.
drunk drivers, that if they didn't have the umbrella, their entire family financial life gone. So, anyway, sorry, that was a quick rabbit trail, but I couldn't agree more on that.
Yeah.
But I do think that being proactive in a
Hmm.
harder market when because what do our clients assume of an independent agent when they're working with us? If you've had a client for a few years, they assume, oh, my rate went up. I'm going to call Adelphia. I'm going to call Tony,
Hmm.
and he's going to shop me and get me a new thing, a new policy. And
Right.
that's one of our value pitches. Like, hey, we want you for a long time as our customer. We have a lot of options. If something goes wrong or we need to change your policy, we have options. We'll do that for you.
Right.
That's one of our values.
For sure.
But that's the mindset of the client. Well, right now, what do we not have? A lot of
Yeah, that's right.
choice. Right? Even though we have, like, you have some of the best companies, right? That you represent in your agency in California. You guys represent some of the top companies.
For sure.
So we're struggling
Hmm.
even with the best companies. And
Yeah.
so that's when I talk about being proactive, what I'm trying to say is, if you know that, if you, number one, you better freaking be downloading your policy data, which I know you do.
Yeah, we do. We do.
Like, if you're an independent agent out there, and if you're don't even know what the heck I'm talking about because you're an exclusive, or just, all that means, policy download just means that the insurance company you're appointed with transmits electronic policy data into your agency management system, or your CRM, if you want to call it that. Why that's important is because you can set your alerts at certain thresholds, right? So
Mhm.
45 or 60 days before the renewal, you get your download. Maybe you've set the alert. There have been basically no alerts because there's been no rate increases. But if you set
Yeah,
it like at 5% or 10%, you can kind of get an exceptions report and be like, okay, hey, Tony's policy just went up like 23%,
right.
with X company. Let's look at it.
For sure.
Okay,
Yeah. How do you, so yeah, what, then what, like then it's just a matter of what your process might be. And there's different practices, I think, for that. Um,
the
yeah,
big
because
thing.
also when there's no choice, that makes it pretty tricky.
Well,
Um,
and that's kind of where I'm going, is like,
yeah,
when you know that there's no choice, and when you
right.
know that every carrier, regardless of channel, exclusive channel, direct to consumer,
Yeah,
independent, is going to be raising rates without question, then
for
it's
sure.
like, hey, Tony, we did a review of your situation. You know what? Your policy went up 23%.
Hmm.
We've already looked at all the markets, and you know what? AAA is going to be taking rate. Farmers has already filed for rate. Geico's not even in the market right now. Like,
Yeah.
we understand this environment sucks, and getting a rate increase sucks. We understand. And normally we'd be able to review your situation and potentially have a different option, which, when the market unkinks itself, we will have those options. But in the moment right now,
Yep.
if you decide to go shop and leave, that's your prerogative. But I'm just telling you that
Hmm.
the whole market is in trouble right now, and we just have to kind of work through it. So when I talk about like being proactive, you don't
Yeah.
have to have those conversations when everything's cranking along, and new business is flying and
Yeah.
rates aren't going up. Um, I think the other thing too is, it's a challenge right now, cross-selling,
Hmm.
um, for carriers who have a lot of auto. They might want more homeowners cross-sold, sometimes vice
Yeah.
versa. The challenge with that is that you may have a situation where you have a client that
Hmm.
is already happy and put to bed, and you start cross-selling and marketing to them, and you might disrupt their mindset, and then you can't actually solve the package problem.
Right. Right.
So
Yeah.
so it's a balance. Like, it's a nuanced thing, dude, when
That's
you're talking about like renewal reviews and cross-selling and
It's interesting because when you talk to different agents about it, Tony, some say like for sure we hit up everybody on renewals and we talk to them and I think whatever, and some say, you know what, we don't even, dude, we don't talk to them. We just leave it. We don't want to wake up the beast and like scare, stir the pot. So I think it's just a matter of like, what do you, what would you want if you were a customer, and how do you want to operate your agency, and then committing to that one process? Because I think it can go both ways. Like you can get, if you do 10 of those calls and half of them are like, sure, give me the homeowner's quote, and two of them convert into a policy, but then agitated three other customers that cancel and you actually lost one, and you
right.
lost three, you gained two. Is it worth it?
It's hard.
So that's the fine balance you're talking about. It's
Well,
interesting.
and I think you hit the right point, and then we'll get back onto whatever your questions are.
Yeah.
This is how it always goes with us, dude. Right? We ramble. Sorry, listeners,
It's good stuff
or
though. It's good
viewers.
stuff.
You hit a really important point though, right? So like,
Mhm.
if your main lead source is just mortgage referral,
Mhm.
monoline homeowners, right?
Right.
When somebody's buying a house, now granted, that market slowed way down now compared to even 6 months ago because of the way interest rates have risen. But
Yeah.
um, no new home buyer wants to talk to Tony about his auto when they're buying the home. They got to move, they got to do this, I don't, signing a zillion papers, like, and
Yeah.
so your referral relationship with the mortgage broker is, hey, I'm going to make this as easy for you to get
Right.
that loan closed. So you get paid, client's happy, I get my policy. There is nothing built into that generally about auto and cross-selling and this and that. Some agents do that as their process. But my point is,
Hmm.
whatever your process is, however your new business pipeline was coming in will dictate how you're going back after that in-force book, right? So
Right. Right.
anyway, like that's a whole nother long discussion about, how you're setting up your process and what your business processes and kind of
Yeah.
structures are. But anyway,
So would you say like processes overall, like just having a strategy and a process to commit to, whether it's following up with them, checking in with them, saying, understand. I think what you said there, Tony, with just being like, hey, look, we understand your rates have gone up. Um, and this is something we're not just seeing in California, we're seeing across the country. It's happening to everybody right now. Now, I know you want to probably one thing we can always do for you is shop around. In this case, we got to stay put. We got to ride this out. And in 1 year, next year, 2 years, we can take a look at it again and we can shop it for you and see what the best option is. But for now, stay put. We'll do everything. Make sure you have all the discounts, make sure you have everything available. Let's review your mileage. Like those are kind of little things that you can do. And just I think what main thing is like be prepared because the inbound calls are going to start to come up with that. So seeing them as opportunities even to like take those calls because we're going to get them, like we're going to get those calls. And then
yeah,
it's a matter of like, what are we going to do with them? Are we going to be in like with our, are we going to be on our heels and not know what to say or what to do? Or are we going to convert it, take it into an opportunity, review, maybe, hey, by the way, do you have life insurance for the more protecting the mortgage? Like that's another, just several things you can do, but I think it's just a matter of being ready for it.
totally. Well, and I think something that you've been talking about recently on some of your other podcasts and videos is, um, if you don't, if you're more of a personalized heavy agency
Yeah.
and you've dabbled in small commercial or commercial lines, but you really haven't done it, again, that area of the market has its challenges. There are certain pockets that are challenged, but there's still more smooth sailing.